Tech can't help me. They're busy buying the dip. I restarted my computer this morning, so I really hope that fixes the issues that we were having on some of the other meetings with the software and everything. Yes, I did. I'm still seeing a black screen on my end through the VTF. Colin, can you get the volume on the TV for me, please? So we'll see. I got to read the disclosure. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades made through Derrick are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Yeah, I get like a weird little error on my side, and once I click OK on the error is when it starts working for you guys. Position disclosure here. I did size down on some positions with this market getting destroyed. So it's the same names, different sizing. Let's talk about it. I got smoked today. I'm always honest with you guys, right? I got totally smoked today. And not only did I get totally smoked today, I could not have been more wrong. I could not have been more wrong on, like, everything. We had a large common gap to the downside this morning that led to brutal opening selling. I can't really remember ever seeing many trading sessions where we had straight selling for an hour off the open. There's almost always an opening low that you can trade versus, and we did have this brief little pivot low at 950 that I called out. And even into that, 22 minutes or so of very heavy selling into it. We know from experience that the heaviest at the open panic selling on these types of gaps typically will last 15 to 30 minutes. So seeing that happen for, like 22 minutes and then us getting this hammer on a little bit of higher volume here at 950 is not completely wrong. And I said at this time, I think I had already tried looking long once or twice where I was being a little trigger happy on it, probably a little bit too quick on that. And then on this one here, when this candle closed with this hammer, I was like, all right, we should see at least some sort of real price correction off this. And if this opening low here now breaks after we've actually seen our first actual technical pivot, if that low breaks, I'm just getting out of the way and I'm done, because this selling is brutal. The opening selling today into a gap down was just so massive, and that's exactly what happened. This bounce back off this 5-minute bar here at 950 was barely anything, and then within 10 minutes we're breaking the opening low, and we're continuing to become more and more extended to the downside on these small time frames. And I know that extended markets can become more extended, so once this low broke, which is what I deemed as the opening low, after trying, thinking here a few, on 2 or 3 times to actually try, culminating with this one to the long side, then I was done. I was really just done at that point. I was out of the way and just, continuing to bleed on some of my swing positions. And at that point, really recommending to everybody on the team, focus on your risk management. Be very selective if you're trying to do anything long at this point, because this market is just absurdly weak. And if you do anything long, make sure that it is selective. Make sure that you get your risk covered very quickly, because this selling here doesn't look like it's going to abate. And that's exactly what happened. I mean, we got really continued follow through throughout the day. There's finally this one little bounce on the volume picked up after 2 o'clock, and we still closed on lows, which actually at this point, I'm happy that we closed at lows, as opposed to Monday a week ago, where we were weak as heck all day and then bounced with 40 minutes left. I think that's difficult. I'm happy we closed at lows today, all things considered, and I'm really hoping that we gap down tomorrow, because then we'll be kind of extremely oversold in this market, and that could lead to at least short-term buying opportunities. and Pat and I were talking, more into the close, saying, this feels different than the kind of these previous sell-offs here. We got just destroyed. What do you want to attribute it to? I don't know. The media, the finance media, always needs to attribute every movement in the market to something. Interest rates, natural gas, the U.S. politicians with the debt ceiling, the China Evergrande thing. It's always something. How about this? There were just more sellers than buyers out there in the market today. The sellers were rushing to the exits, and the buyers didn't come in to kind of buy this dip around. And the things that we were looking at here that led me to really believe that this could lead to a bounce was we had the TLT bottom. So there's a few factors that like the finance media can talk about why we sold off today. They could talk about interest rates. They could talk about natural gas. They could talk about the debt ceiling. They could talk about China. But if anything, today, China was a bullish factor. And Alibaba, as an example, closed up 1.25%. Alibaba was relatively strong, closed positive. The Chinese names held up really well because the Chinese government actually came out last night and said that they're willing to support regular people who might be being exposed to the Evergrande crisis. That's bullish. China performed well overnight. So that one's completely out of the picture. TLT, we can look at for interest rates. I've spoken to you guys about how it's not just the change in interest rates, it's the rate of change of interest rates. This sell-off since Thursday last week has been massive. Interest rates have gone up a good amount in a very short period of time over the course of 4 days. That absolutely has a destabilizing effect on the market to the point where I'm actually surprised that we didn't sell off more the last 2 trading days. You go back to the SPYs held up perfectly up here the last 2 days, despite the fact that the TLT was selling off rapidly, interest rates are moving high rapidly, and then today they decide, okay, we care about interest rates again? I think it's more of an excuse than anything else. And if you look at the 5-minute chart here for the market, TLT put it in its bottom at 950. So you would think that if we didn't sell off on interest rates the last couple of trading sessions, and we bottomed at 950 and worked our way higher, and we were stable throughout the day, that at least, even if it was going to be a weak day, that we would have been weak hanging out around this 938 area today and not selling all the way up to 933. But we continued to sell off all day. You want to talk about natural gas being a destabilizing factor? Well, natural gas made its pivot high and actually went negative at the same time TLT made its lows. So this is why I was excited for this pivot. I was excited for this pivot at 950 today, because at the same time as the SPYs were giving us this 5-minute hammer, the TLT was making its low of the day, and natural gas, our other destabilizing effect, was making its high of the day. So even though natural gas stabilized and actually went negative a little bit, which is what I said that the market needs to see, and the TLT stopped going lower and kind of pivoted, although it had a pretty weak close here, stopped going lower and actually pivoted, the market couldn't do anything. The SPYs, the Qs, and the IWM, which tried to be strong today, also ended up being down huge. I don't think we looked at percentages, right? SPYs are down 2%, Qs are down 3%, IWM is down 2.15% today. It's a bloodbath out there. It was a complete and utter massacre, and there's a lot of stocks that are just so much more beaten up than that. And if you actually look at the index here, what's the S&P? 4% off all-time highs, 3.5% off all-time highs. I don't exactly know what the numbers are. But man, oh man, did it feel like a bloodbath. And I just could not have been more wrong. I'm looking for the common gap to the downside, opening low trade. It really looked like I got it here at 950, and that trade just totally failed. And that was after I jumped the gun on a couple occasions. I was looking at pre-market, our game plan this morning. Every single trade that I brought up in our morning game plan this morning for like a dip buy type of situation failed. Most of them gave us the opportunity to at least cover our risk. So if you had good execution, you traded it well, you're able to cover your risk, And if you managed your risk and you had your stop losses in and you were focused on that, you probably didn't really lose anything in most of them. But some of these just really did not work out. We spoke about, for some of the stocks that have been strong, that have productive charts, that are gapping down this morning because the whole market's gapping down, utilizing that as an advantage. And again, guys, it's the marketplace. We work in probabilities. That means that literally anything can happen in trading. And honestly, 9 times out of 10, the calls that I was making based on this morning's morning meeting are going to be right. Today was that 1 time out of 10 where I was just basically wrong across the board. We talked about buying AMD versus 106 because of this gap down. 106 was the big level I wanted to buy yesterday. I didn't take the buy because I thought it wrapped up too fast into that 106 and just got there too quickly that I didn't want to take that purchase through that area. So I was like, okay, we're getting a gap down this morning. This AMD daily chart starting to look really productive. I can try to go long versus that 106 because of the gap down. Well, guess what? Trade failed. If you came in and bought right off the open with like maybe 60, 70 cents risk, you probably were able to cover your risk. If you were patient and you were buying for better prices versus 106, it just straight failed. We talked about NIO versus 36. NIO, again, if you bought this right off the open, which is when we were calling it out, you could have gotten a price around 36.20 or so. The stock actually went green, so long versus 36 bucks was the call out. The stock actually went green, so it still was able to give you 4 times your risk, and then bam, by 9:45 it's breaking $36. That trade's failing. Hopefully you were able to get your risk covered on it because it actually did give a decent opening move there. We talked about going long Snap because Snap, I can't type. We're talking about going long Snap because Snap has this great looking daily chart. It's cleared this $78 resistance inside day yesterday, and it's just gapping down huge because the market's so weak. You can go long versus $78 in Snap. Totally failed. Totally failed. Again, same thing. Maybe first you're buying on this first 5 minute versus the opening low. You might have been able to cover your risk. You should have been able to cover your risk. So if you had a good execution on kind of all these trades so far, maybe you're finishing with your P&L as a 0, because most of them bounced well enough initially to be able to cover the risk, but they all failed. SUMO was another one I was talking about. SUMO's just been getting destroyed since its earnings report. $16 is a really big support level going back to last May, and it is a $16 stock that is extended by over $1 to the downside into support. I love stocks when they are extended into their levels because you can get really good risk rewards out of it. Talked about going long back through 16 versus this opening low of 1688. This is another one. This one actually held in really well for most of the day. If you bought back through 16, which was the call out, definitely big enough of a bounce here to cover your risk. And guess what? Even this one, even though it held in so well for most of the day, by 12:45, it broke its opening low, and it also failed. I'm sorry, guys. I really hope that people were focused on risk management. I really hope that people were focused on a game plan and were able to kind of get their risk covered on some of those trades that they took. Everything I did today was wrong. Everything I was looking at was wrong. Every idea I had today failed. And again, I apologize for that if anyone lost money today. Just really doing everything I can to provide value to you guys. And I understand probabilities, and I understand these situations, and I understand that the probability here at 950 of us getting a real bounce when the TLT is making its low and UNG is making its high, and the SPYs are super extended on every single time frame, and we've got these bullish looking stocks versus important levels. I understand that the probability is on our side, the risk reward is on our side. Every one of them failed. So again, if you got involved in these things, you lost money on them, I'm really sorry about that. And it's why risk management is so important. Risk management is so important in this business because you will be wrong all of the time. And again, I got absolutely smoked today. It was one of the worst days I have had from a P&L basis in a long time. Again, luckily, at least as far as my swings go, it's primarily just giving back profit. But everything else that I was looking at as a trade was just a failure, and I got smoked. I don't really know what else to tell you. It just kind of is what it is. We closed week today. I'm hoping, praying, begging for a gap down tomorrow. The bigger, the better. But this QQQ closed right at this 360. 360 is that big support level that we've been looking at. Q's failed to hold 360. Your next real support level isn't really down till this 352. But again, just on overextension rules, if we get a big gap down tomorrow, look at the volume on this TQQ today. Holy cow. We get a big gap down tomorrow just because of extension rules. There should be some sort of opening bounce that we can take advantage of. But this selling today, it felt very different. No opening buy. This was heavy institutional selling that was coming into the market. Any opening, pivot low that you were using just ended up totally failing. And again, just to reemphasize it, you live to fight another day. If you have good risk management. If you don't have good risk management, well, that's when we got to bury you 6 feet deep, because it's just not going to work out for you, because no matter what, there's going to be market sell-offs. There's going to be times that you're wrong. There's going to be times that I'm wrong, like today. And we really just kind of have to take it as it comes. I don't have anything else to talk about. I don't know. I'm almost feeling a little bit emotional on how today's trading session went. So happy to answer any questions that you guys have. At least I'm going to a cool concert tonight. I'm seeing Primus. They're doing the whole Farewell to Kings tour tonight, so I'm pretty pumped about that. All right. Looking for questions. Brent saying, you talking about this at this time helped me out a lot. Awesome. I don't know what your comment was involved with what I just said, but if I helped you out a lot, I'm happy to hear it. Gabriel was trying to be patient on an AMD to get a better price. That probably just led to a straight loss. Yeah, MOC imbalance was $2.8 billion to sell into the close. That's also huge. Let's get that big gap down tomorrow. George here saying that my analysis was perfect, but today was brutal. Yep, I agree with that. Christian here. I noticed that when talking about levels, you sometimes say on a closing basis. I think I understand what that means, but could you explain when it is better to look for a close above or below a level, and when it is better to trade the price through a level? Okay, so basically, and I wish I had a really good example of it offhand. There's plenty of examples out there. I just can't think of anything offhand right now. So if anybody's got one, that'd be great. So basically, Christian's question is, sometimes when I'm looking at support or resistance levels, I talk about like just trading through a level, and sometimes I talk about you actually need a close above the level. So the thing about support and resistance is it's always ideal when the support and resistance that you're looking at is like a perfect price. Like, that resistance level is $50. It's very clear. 50.00 is the resistance. Great when that happens. Most of the time, it's not how it works. Most of the time, the way that support and resistance is it's an area. It's the area between 49.70 and, like, you have these tails that go through 50 in this case. And some of those tails go as high as like 50.30, 50.25, 50.15. So when you have this resistance area and you've got the tails that have gone through 50, that's when I say on a closing basis. Like, you really need it to break above and to close above. So how do you know, if you're trying to buy the breakout in our hypothetical stock here through 50, how do you know that today is the day versus today just being another day where they're just going to tail right through it and then they're going to, shake you out of the position and you're going to get stopped out of it? Well, there's no way you can know for 100% because there are no 100% in trading, but we're looking for certain key things like volume and option flow to give us the confirmation that today can be the day. And then you actually have confirmation itself only when the market closes above that level. And then when you get the close above that level, then you have confirmation, and then the whole chart starts to look significantly more bullish in this case. So Christian, that's basically what I mean there. Usually that means I'm looking at like a loose level where maybe there's a lot of tails through or whatever, and we need to see confirmation by getting above and closing above, as opposed to we can find some other levels where it's just very clear this is the exact price, and that's always better, but it doesn't always happen that time. What do I think of Micron? Didn't Micron just report earnings? I didn't see the numbers yet because I'm getting ready for this meeting. I need to see the numbers on Micron in order to have an opinion. Let me scroll up in the VTF here and see if I can find them. Pat, did you post them?
Both posted. They beat slightly, but guided down pretty big.
Okay. So Micron, Micron Q4 adjusted EPS of $2.42 beats estimates. Sales also beat estimate, and then I think this is guidance. See Q1 adjusted EPS of $2 to $2.20 versus that's a big miss, versus $2.61 estimate, and sales of $7.45 billion to $7.85 billion versus estimates of $8.63 billion. Okay, so Micron beat on their earnings, they beat on revenue it looks like, but the guidance missed. Guidance is more important. The expectations for the future are always going to be more important than what happened in the past. So that's not good. I do like Micron as a whole, and you've got a little bit of a level here around 69, but I really don't like when these companies, and I know Micron is like, it's not as much of a value semiconductor as like Intel, but it's more of a value semiconductor than like an AMD or a NVIDIA. It's like a little bit somewhere in the middle. So specifically when those heavy growth stocks miss on estimates, they get like brutalized. So Micron here is it's off $3 right now after hours, so it's kind of holding in. It's holding above the support level I'm talking about, which is around 69. So you can look at this versus 69. I got to tell you, I really don't like when these companies miss guidance. So I don't think I would want to be involved in this right now. Let's kind of see what this thing looks like after it settles out a little bit. Thanks, Ben. I appreciate that. Thoughts on NIO stonk? Yeah, NIO stonk, Ben. It's Ben, right? No, it's Robbie. My bad. NIO stonk, Robbie. This was on my radar today. This was one of my game plans for today, was to go long NIO off the open on the gap down versus $36. It failed. I thought that NIO was looking so good after yesterday's price action. That's why I was on the radar. That's why I wanted to be involved in it. Today it failed. It did not break yesterday's low, so it's still kind of intact. You could try to be long versus yesterday's low. You could still be giving it space to yesterday's low. If it breaks yesterday's low, get out of the way. I like the idea of NIO. This is just not the price action that I want to see. Again, maybe the only reason that NIO failed today is because the market was just so weak. And if the market could have just been normal today or just gone sideways or been flat, then maybe this NIO would have shown good relative strength and held up above 36 and it'd be looking fine. So maybe we can chalk this up to the market and you can still be long versus yesterday's low. You lose yesterday's low, you got problems. Really, I want to be long this stock because it's holding above 36 like it was able to do yesterday, or on a bigger dip down to 31, 32. So, again, it's not totally broken as long as it's above yesterday's low, but today was just not a productive day for this name or for really any of the longs. Zohar here. Not sure if you covered the macro picture. This is exactly my problem, Zohar. And so let me repeat Zohar's question for people who can't necessarily read it. What triggered the institutional sell-off today? Is it the rate hike? Is it the inflation fears? Is it profit taking? This is what's so hard to point to today. And the Wall Street media, again, they always like to have a reason behind it. Sometimes I find there's really not a reason. It's just that there was more selling than buying that day. And it could be a whole host of factors that came in all at once. And some of those factors include the government debt ceiling, the interest rate being brought up, the rate hike, the natural gas move having a destabilizing effect, inflation fears, I don't know. I don't think there was any real new data that came out on that. Profit taking, sure. Hedging, selling, sure. I don't think that you can really point to one thing today, though. Because, again, this is what I was just talking about before. If you want to point to one thing, you want to point to natural gas, and I know, some natural gas guys who are like, oh, my God, this natural gas move keeps happening. It's going to have a destabilizing effect on the market. I totally agree with that. But guess what? Nat gas made highs pre-market, and then it made highs at 950 today, and then it actually went negative. And then if you want to point to interest rates, okay, well, interest rates made their high. The TLT made its low at 950. But the market sure didn't make its low at 950. That sell-off triggered, sell-off continued. Could it be the debt ceiling situation? It could be, but my thing about the debt ceiling, and I know some guys are really worried about this, the thing about the debt ceiling is I've just seen this happen so many times before. The U.S. government is such a disaster that this seems like it happens every year or two, where we have a looming debt ceiling situation. I mean, I think it was even under the Obama under Obama that we actually shut down the government for a period of time. None of those things have ever really hurt the market too much. Why can't it just be all of these things coming together at the same time and just a negative feedback cycle in the market? And technically, I had an engineer once correct me on that. I used to say positive feedback cycle is buying leading to more buying, and a negative feedback cycle is selling leading to more selling. And then I had some PhD on the desk with an engineering degree who corrected me and was like, oh, when a market selling leads to more selling in a market, that's actually a positive feedback cycle and not a negative. I'm like, whatever, bro. Everyone understands what I'm trying to say. But it basically could just be a feedback cycle. We had a big gap down, so people started selling because of that. You had that initial 15-minute selling, and that just led to more selling. The buyers were not to be found today. The dip's not big enough. I mean, we haven't even broken Monday's low in the S&P. I honestly think it's all of the variables coming together all at once, and not just a single thing that we can point to. Though I'm sure CNBC is going to have their whatever on TV where they're going to point to one specific thing. And obviously you had comments coming out of Jerome Powell today that everything looks fine for tapering. That probably wasn't great for the market. You had comments coming out of Janet Yellen today that probably weren't great for the market either. It was just all these things coming together at once. How many times a test level makes sense to me? Yeah, Joey, for sure. Next from Sebastian here. When you're trailing an intraday position and it goes to your target, how much percentage do you like to keep in case it goes higher? It depends on the big picture. It depends on if I'm with the trend, which usually I am. But Sebastian, the direct answer to that depends on the big picture. It also depends a little bit on my portfolio. It could be anywhere from 10% to 50% on it. Next here from Robert. What would be a good risk management for scalping? So I don't do a ton of scalping anymore in my own trading anymore. It doesn't mean I do zero, but I think that trading as a scalper has actually gotten much more difficult over the years compared to how it used to be when I was a newer trader. I mean, the thing about scalp, but honestly, the risk management rules are going to be the same almost regardless of the approach. You have a stop loss for every trade that you take, and you have a max loss for a day's worth of trades. You got to have both those things in. So whether it's a scalp or a bigger picture trade, you know exactly how much you're risking before you enter the position, and you know exactly what your maximum loss on any day should be. And then you follow it. It's key. I find my issue with scalping at this point in my career is I find it to be more reward limiting than anything. If I've got trades that are working for me, I want to try to give some of it some space to really work for me so I can make even more money. Q's tested 360 in August and September. Yes. And July. Yeah, every single time. So every single time a level gets tested, such as a support level, there's a higher probability of it breaking. So the fact that this is the fourth or fifth time of 360 testing since July means that there's a higher probability of it breaking. But you also want to pay attention to that in conjunction with extension. When you're really extended into the level, so one of the reasons why levels tend to have a higher probability of breaking every time that they get tested is because usually you have less extension on each test. And I'm trying to think of an example. Maybe like Zillow off 90? Even that's not a great example. But you can see basically every single time that it's gotten tested here that there's been a little bit less extension to it. There's another one that I was looking at recently. Baba. I think Baba's a really good example. You know, Baba, really big extension, got a nice bounce back. Okay extension, nice bounce back. Lesser extension, lesser bounce back. And then eventually broke. Also a little bit sloppy. But the principle is the same. Every single time a level gets tested, there's a higher probability of it breaking, but we still need to be paying attention to our extension rules. And honestly, we are pretty extended down here, which is why I would love a big gap down tomorrow. Big gap down, trade back through 360, something like that would be ideal. Because it'll just make us so extended. Thanks, Joey. Yes. Yeah, I agree with you there, Zahor. If the market gap's down overnight, which appropriate game plans do we need to implement to trade or not pre-market? Got to see it in the morning, Rich, I think, to see what that actually looks like. But basically, we're going to be looking, similar to what we usually do on the big gap downs and large extensions. We're going to be looking to be long initially because of the degree of extension versus pre-market and/or versus opening lows. So that's what we're going to look at here initially tomorrow morning, just because of the extension. Otherwise, though, Qs lose 360, and Qs are bearish for the first time, and I can't tell you how long. They actually will be bearish if we really lose 360 tomorrow. We will be in a pattern of lower highs and lower lows. Whereas the IWM is back to neutral territory. The SPYs are back to neutral territory, but if SPYs start losing Monday's low, if SPYs start losing 429 or so, then SPYs are going to be bearish too, but they're still a little bit a ways away from that. So we potentially have one bearish index and two neutral indexes. So that means broadly that you'd rather be short than long. I haven't said that in a long time, but we also got to pay attention to our extension rules because you don't want to be really initiating like new shorts if the market's massively extended. But into bounce backs, that's when you want to be doing shorting if we actually have confirmation that we're in more of a bear type market. Thanks for the question, Rich. Next here from Pat. What clues could I and others have seen to foresee today's action? AMD looked primed for follow through. Marty, you might be asking the wrong person today. Because again, I didn't see those clues. I'm really looking at a common gap to the downside. I'm looking at the TLT bounce. I'm looking at the UNG selling off those highs. I'm seeing all these things coming together that are telling me that the market should be giving us a bounce off opening lows, and there was nothing to do there. The only real clue that I see is this bar right here at 10 a.m. where we broke lows. Because it shouldn't have happened. And I still don't necessarily believe that was a signal to short. I think it was a signal, and this was what I was communicating to the team. It was a signal to get out of the way on your longs. Oh, excuse me. It was a signal to stop yourself out, to manage your risk, to start being really patient and not necessarily do anything. That's what I think that the 10 a.m. signal was. And it's not as much of a signal as it was to short it. It just was a signal to get the heck out of the way on your positions. When AMD lost that opening low that it tried to put in when it lost 106, it was your signal to get out of the way. Have those trailing stops in. I'm a big believer in risking money that you've already made in order to make more. So, I'm down a lot of money today, and a lot of it is money that's already been made. So I can't be too upset about it, though it's hard to be when I look at the number because it's a big number for me. That's pretty much it. All right, gang, I'm going to a concert tonight. I'm going to try to have some fun. I'm going to try to have one beer too many. Our man Dylan here is saying that there's a new YouTube video up on moving averages for you guys to check out. It's probably on the Derrick the Trader YouTube. So give this a subscribe. If you think it's cool, give it a like. And hopefully we can all continue to learn. All right, gang. Have a great night, everybody. I'll see you all tomorrow.